Welcome to today's explainer. Look, if you've been keeping an eye on the crypto markets, hearing all the buzz, but still feeling a little overwhelmed by the sheer amount of jargon out there, you are absolutely in the right place. Today, we're cutting straight through all that noise to build your ultimate beginner's blueprint for secure investing in 2026.
So what if I told you the biggest financial opportunities are still happening right now in crypto? I know, it's a really bold statement, but it perfectly represents the reality of our current financial landscape. It's totally natural to be curious about this space, but the truth is, most beginners are just sitting on the sidelines. They're either too scared to start, or they dive in entirely blind and lose their shirts simply because nobody actually took the time to teach them the right way to navigate the ecosystem.
And honestly, that fear? It comes from those extreme stories we constantly hear. On one hand, we've got the absolute dream. Life-changing money, crazy tales of people turning a couple $100 into an absolute fortune. But then, on the other hand, there's the nightmare. Losing everything literally overnight by desperately chasing hype and getting completely wiped out. This massive contrast is exactly why we cannot treat this like a trip to Vegas. We need a structured, highly educated approach.
To avoid those nightmares, here's our roadmap for today. 1. The crypto reality check. 2. Understanding crypto asset types. 3. Buying and storing safely. 4. Smart strategies for beginners. And 5. The long-term mindset.
All right, let's dive right into Section 1, the crypto reality check. It is time to finally break that get-rich-quick myth.
So many people enter the space thinking they're going to double their money by Friday just because some random influencer told them a coin was going to explode. But what actually is cryptocurrency? Well, simply put, it's digital money running on blockchain technology, which allows you to transfer value directly over the internet without a middleman, like a bank slowing things down. But here's the real insight I want you to take away. Don't view this as a lottery ticket. View it as an entirely new financial system. Major global banks and massive institutions are actively building their futures on this right now. It is a fundamental technological shift, not a casino game.
Moving on to Section 2, Understanding Crypto Asset Types. Let's figure out how to treat coins like businesses.
When you're staring down thousands of different coins, the secret to not getting totally overwhelmed is categorizing them. First up is Bitcoin. Think of it as a large, established network acting as stable digital gold. Next, we have Ethereum. This is a high-growth network powering smart contracts, decentralized apps, which you'll often hear called dApps, and digital collectibles like NFTs. Then we've got stablecoins, which are specifically designed to stay safely pegged to the US dollar, keeping volatility super low. And finally, altcoins. Honestly, think of these as your risky tech startups. They have massive upside potential for sure, but a very, very high chance of failure. Understanding these four categories matters so much more than trying to memorize random coin names.
Now, the reason we just categorized Bitcoin as stable digital gold comes down to one highly specific metric: 21 million. There will only ever be a maximum supply of 21 million coins in existence, period. Think of it kind of like digital real estate in a major city where absolutely no more land can ever be created. That built-in, hard-coded scarcity is exactly what drives its value proposition, especially when you compare it to traditional money that governments can just print endlessly.
Okay, let's get practical with Section 3, Buying and Storing Safely. We're talking about the actual mechanics of security here.
To actually buy crypto, you're going to need an exchange, like Coinbase or Kraken. Always do your own research, and please never rely on social media hype to pick a platform. But listen to me, the absolute non-negotiable step here. The one thing you have to do? Enable two-factor authentication, or 2FA. This means you need a secondary temporary code from an app on your phone just to log in, not just a standard password. In a world where massive exchanges like MTGOX or FTX have historically collapsed or faced catastrophic breaches, security is literally everything.
Now, leaving your long-term investments just sitting on an exchange is a massive rookie mistake. Serious investors use dedicated wallets. First, you have hot wallets, like MetaMask. These are connected to the internet, making them incredibly convenient for daily use, but naturally, they're slightly more vulnerable to online threats. Cold wallets, on the other hand, are physical offline devices. Think of them as highly specialized flash drives that store your crypto completely disconnected from the web. Upgrading to a cold wallet is hands down your absolute best defense against catastrophic hacks as your portfolio starts to grow.
Which brings us to Section 4, Smart Strategies for Beginners. Let's talk about managing risk and human emotion.
Because here's the reality. Navigating the tech is one thing, but your own emotions? That is where the real battle is won or lost. So let's establish the rule of never. Never use rent money, never use emergency savings, and absolutely, under no circumstances, borrow money to buy crypto. The market is incredibly volatile. I'm talking 15% drops in a single night, which happens all the time. If a sudden market dip makes your heart stop and makes you panic, you've invested too much. You must only allocate funds you can genuinely afford to lose without it affecting your daily life.
So what's the safest way to invest those funds? Enter dollar cost averaging. Instead of dropping, say, $1,200 all at once and just crossing your fingers that you time the market perfectly, you invest smaller amounts consistently, say $100 a month, regardless of whether the market is up or down. Over time, this perfectly smooths out those crazy highs and lows. It establishes a steady average purchase price, and, most importantly, it completely removes that dangerous emotional impulse to treat it like gambling.
To wrap up our strategy, let's rapid fire the 5 massive beginner traps you need to avoid. Buying purely based on influencer hype, panic selling at the very first sign of red, treating crypto like a get-rich-quick scheme, throwing money at projects you simply don't understand, and finally, ignoring security measures and leaving your assets exposed. If you can just sidestep these 5 traps, you are already ahead of 90% of the crowd out there.
Finally, let's move to Section 5, the long-term mindset. Let's lock in that 5-year outlook. There's this really famous saying, most successful investors simply manage risk better than everyone else. And it is entirely true. Wealth isn't built by magically finding some secret coin, it's built by surviving the brutal, cyclical crypto winters. The market will inevitably crash. It always does. But historically, it aggressively rewards those who stay patient, stick to their strategy, and tune out those impulsive emotions. Just think of the guy who famously bought 2 pizzas for 10,000 Bitcoin years ago. Patience is absolutely the hardest, yet most rewarding skill to master here. So I want to leave you with a question to chew on. How will you build your knowledge and invest responsibly over the next 5 years? Because right now, your absolute biggest advantage isn't a pile of capital, it's time. Are you going to treat this like a fleeting casino game, or will you take the time to prepare for the biggest technological wealth transfer of our generation? Thanks so much for joining me on this explainer, and I'll catch you next time.